All righty. Good morning, traders. This is Blake, and you are listening to the Face Show. And no, Dale is not here today. He is traveling back to the coast. And so I told him yesterday that I would fill in for him. So you got the two-man wrecking crew this morning. You got myself and Mr. K-Man. K-Man, how are you?
Hey, Blake. Hello, everybody. Yeah, I'm good, man. I'm good. So we need to fill in big shoes today, huh?
Yeah, yeah. Big shoes to be filled today. I mean, the good news is we have nothing to talk about.
Yeah, moving on.
So a couple things that's changed from yesterday. Yesterday, I actually started buying the euro when it was closing in on this trend line, and then when we broke that trend line, and I tell you, we also had this conversation yesterday, and you'd mentioned it, and I took heed to it as well. Oops, sorry, I didn't mean to hit my microphone there. We were discussing gold and how gold had broken, but it really hadn't broken. It was just kind of testing below that trend line. I'm like, you know what? You're right. And because it wasn't really breaking, I wasn't I didn't mind buying some euros. Anyway, once gold started to break down, I actually reversed course and I turned around and shorted euros and started playing the dollar on the long side yesterday. So I took a little bit of a loss on some of my trades, but on the euro long. But then I turned around and went short euros, and euro's breaking down, and it's not just the euro dollar, it's the euro crosses. They continue to bleed lower. So what's driving this move that we're seeing today, Kay? Is it just a continuation of yesterday?
Well, first, I think, yes, it is a continuation of yesterday. As we can see, um, it's accelerated this morning. I think quite a few people were still looking for details also, but then the more the European politicians start to moan themselves, the lesser the market has confidence in this deal being any good for Europe at all. So I I really think the market is now in the camp of whatever trade deal there has been signed so far. It's been rather a US win than a win for the other side of the trade deal, And we've seen it with the yen. We've seen relatively the same thing for happening in yen, and now it's
Yeah.
happening in the euro, and the euro just can't hold the beat. Yeah, we had this acceleration this morning, then some correction right after. But as soon as you guys walked in, it's gone down again. Um, we're also ahead of an avalanche of data and central banks coming up onto us, and I think the market just those doesn't want to hold too many euros, whether it be euro dollar, euro crosses. A lot is driven by those crosses, right? Because if you look at even if cable broke a bit lower, the euro sterling is still lower. So a lot of it is cross driven as well in the euro, but it just can't hold a bit right now. And you know what? Rightfully so. At least in the short term, and the market needs to reprice that hopium that there was for a decent European deal with the US. All details are not known yet because there are some discrepancies between what von der Leyen understood and what Trump is saying on pharmaceuticals, for instance, and all of that is sowing a lot of doubt in the people's minds towards the euro and right now, and it's gonna be tough to really reverse course unless we get really bad US data, right?
Right.
And I, yeah, I'm still thinking like euro could actually go for a leg lower, but that and I spoke about that on the Flow Show as well, and on my update on on our website too. We are still in those trades where you go, um, this is what's happening in the short term. But then if you look at the bigger scheme of things, and if you look at a bit the longer term in the euro, we are still much higher than where we were give and take March, April, and it could still be that we are in a bigger um, range building exercise here. But in the
Yeah.
short term, in the short term, I personally don't like to be long euros right now.
K-Man, so this was a concept that about 2 weeks ago, as we were approaching the tariff deadlines, I started talking about, and this is week ahead video where I get a lot of time to kind of explain concepts. One of them was, look, originally back in, November and December of last year, I say people, analysts would tout that, hey, these trade deals are going to be great for the dollar. That was like
Mm,
you know, tariffs is going to be a big boost for the
mm,
dollar. It's going to be a boost for America. And what we saw is we actually saw the opposite, and now for good reason too. Um, there was threats of tariffs. There's a lot of erratic behavior. People were like, oh shit, I don't want to own the dollar. I just want to stay
mhm,
away from the dollar. The Trump administration's too crazy. But then now, these deals are now starting to get done, and we are starting to, how should I say, reap the benefits. I say reap
mm,
the benefits, which is it's silly because if there's anybody that knows about what tariff impacts are to our bottom line, I know because I've told this story before. My wife had a $25,000 crate of boxes coming from China in 2017, and we paid $15,000 on top of that for tariffs
mm.
that we had to cough up.
Yeah,
I'm talking about me, that we had to cough up initially. That's who took the burden, and that's who takes the burden is our producers or whoever is importing the goods. We have to pay that tariff whether we push it off to our to the customers is another question. But again, we, meaning the United States, was taking in all of these revenues, and now that these deals are getting done, the dollar is starting to be a beneficiary there. And then you talked about this sowing the seeds of doubt in the Eurozone. I know there's been a lot of moaning from the some German finance ministers talking about how bad it's going to be for Germany, but really for the Eurozone, it's already struggling as it is. The price where we're at now in the euro, where, like you pointed out, where we're at the beginning of the year versus where we're at right now, is still significantly higher. So there's going to be at least some room for correction at this point in
mhm,
time. And that's when I start looking at harmonic patterns. And this one you can see right here. If you guys don't know what this is a bat in development. Whether we, extend our move to 114 or down to 112, this is a
mhm.
bat formation that is developed in the euro. And it's now that we've broken this rising trend line and we've broken through support, and this is key support too. It's not like minuscule. Now we've broken through, breakout points. We're now creating lower highs, lower lows, and now it is really just, now it's more of, as you pointed out, it's going to take a lot to turn the ship. And it's not just the euro here, it's the dollar index.
Yeah.
The dollar index has been beaten down by the ugly stick. We have an inverted head and shoulder pattern that's trying to play out to the upside, K-Man, and everybody is short the dollar. So it seems logical that we get a squeeze, and that doesn't mean it's just the euro. Sterling could be trading down at 130. We do have a head and shoulder pattern in play right now. If you guys are not Forex Analytics subscribers, you can see we put in a head and shoulder pattern yesterday. So if you want to see what that chart looks like, that's what it looks like. That points to below 130 right now. You have currencies like Here's a good example: the U.S. dollar Norwegian krona. I mean, this thing's been beaten down aggressively. Why couldn't we trade back up towards 1060, 1080 in the U.S. dollar Norwegian krona or U.S. dollar Swedish krona as another really great example of a currency pair that could really carve out a nice rounded bottom and give us a move back to 1020 up here. So overall, K-Man, how do you feel about the dollar given the current state of the dollar and how far it's dropped over the course of this
Yeah.
last 6 months?
Well, that's a kind of exactly what I thought that would happen at the start of the year. We did that preview of 2025, and I said like, well, dollar's going to be bid until Trump really sits down in office, and then it's the end of it. I wasn't really far away, and now we are in this phase where we have to see or we will see what's really going on with those trade deals. For a long while, for a while at least, the dollar has been beaten down because other other counterparts were trying to talk to each other and say like, okay, what can we do to counter Trump, right? And then finally, when the deals come through, they seem to be on their own again, having to negotiate with Trump, and they get deals done. Now, this investment into the US is, and we don't know when it will come. We don't know exactly how much of the $550 billion on the one hand with Japan, the 600 on the other hand with Europe, that it is really going to materialize. But the market takes it now as a US victory. And if you look then back onto Europe, you say like, yeah, you know what it means to pay 15% tariffs. I've got the impression, and the Japanese automakers have sent this message out as well, is that not everything is going to come as a 15% surtax on US consumers. I got the impression that either the Europeans will up their plants also in if you talk about the car makers, for instance, up their plants in the US, and then they can go around those tariffs because Trump and his administration always has said if you are and if you build in the US, it's going to be a much better deal, or they are going to eat a part of those 15% themselves. And I think that's where the market is at right now as well, trying to figure out how much is Europe really going to um, stand pat or give in more. That is just to take that one example of the European car makers, is to lower their prices, and that is going to be an additional cost on top of for Europe in an already very anemic growth environment in Europe. Okay,
Yeah.
we have this one outliner, which is Spain. Spain is doing much better than the other big countries in Europe. But you look at Germany, France, they still are extremely fragile. So you put one and one together, and you're still with a eurozone that is really under the cush, right? Compared to the US, for instance. So all this buildup of positivity in the euro. We are going to fight. We are going to find other outlets for our goods, and not the US, and all of that, and then the outlook for the deal. Then later, which has pushed the euro crosses up, euro sterling, euro yen, you name it. All those euro crosses were pushed up. Market comes around now and says like, well, hang on a bit. I mean, this is maybe not exactly what will be good for Europe, right? And I think that is where we are now. And then
Okay.
and then if you
But
yeah
we're talking about Europe, but let's talk about the rest of the
yeah
rest of the world. I mean, okay, let's start with sterling. I mean, one of the big reversals we've seen,
mhm,
and as of obviously beginning of the week was sterling. I mean, we already have a UK US trade deal, right? We US UK trade deal is what I meant to say. We
mhm.
had a US UK trade deal, and so we were actually we popped above these highs, hit this major resistance and reversed, and we're trading at the lows right now. I mean, it's freaking ugly. Um, how do you feel about the UK economy at this point?
I'm um, um, I'm not convinced yet. This is the market getting out of euro sterling, right? Getting out of the probably the euro side of the euro sterling. I'm not convinced yet about the UK economy because yesterday when Trump and Starmer had their meeting, it was all nice and dandy. Trump even giving some friendly advice, whatever. But then when it comes to the crunch point, and which is the UK steel to the US, he said that well, the US will manufacture their steel and aluminum themselves, and that combined with the fiscal situation in the UK and the fragility of Reeves and whatever she will come up with, I think is still not convincing me to be long sterling. Against the euro is one thing, but sterling as such, I'm not convinced that sterling is going to stand up. So then we're talking, for instance, about cable again. And yesterday we saw this break of 133.65.75. You were talking about a head and shoulders. It was just a level on itself as well because we've seen decent bounces of that level as well.
Yeah.
And now we are running into this wave of US data, FOMC tomorrow. I think for the dollar in general, but also for the cable, this is going to be one very interesting few days. Because if the dollar does not give in, or if the dollar doesn't see the US doesn't see very weak data, we can indeed continue with this correction, or maybe some people will call it a reversal, but at least with this big correction in the dollar may just not be over. Um,
Yeah, that's
yeah,
a great point, K-Man. I mean, people have been, people have been expecting a hard landing in the US for like literally a year and a half. Ever since like 2022. So almost 3 years, the market's been like, oh, here comes the hard landing, and everybody's been wrong. I mean, whether you like it or not, we got the Trump bump, we got we're at some point the data is gonna start to show some weakness, you'd
we will
think,
see.
but it hasn't, right? I mean, the
Well, we
US
will see.
economy is still exceptional comparatively speaking.
Yeah. And we were talking about those at the end of the week about the jobs report, right? Because this is something that, to me, will overarch virtually everything else. Because if your job market slows down, your economy slows down. There is
Yeah.
no two
Yeah.
ways about it. But
Right.
it may be that we still need to wait for 2 months before all those job cuts and everything will really show up in the numbers. There is an expectation for having a relatively low NFP this week. Um, but it may have to do with some different factors. But the market will understand the number. Imagine that we even have a print under 100K, but for reasons that have been documented, it may be that we just see a little bit of a reaction on the back of the weak print. But if your unemployment rate doesn't really start to tick higher, the market may actually look through it and still buy dollars towards the end of the week. Too early to tell, of course. We still have to see the numbers, but it could be that the US just continues at least for another couple of months to do better than at least Europe and the rest of the world.
And let's not forget tomorrow being Wednesday, we're gonna get ADP, but I have to say ADP, you notice last month the ADP number came in at negative 33,000. The market they basically shit their pants and said, "Oh crap, here it comes." And then what happened? We had a good jobs number, good BLS number, at the end of the week. And now obviously, the analysts are like, oh shit, totally wrong, seasonality, screw that. And, then their numbers are back at 82,000. But just because we have some number that shows up weak, like we did last month, doesn't mean that the BLS number is going to necessarily be weak. And we're not going to get a glance at the ISM services data this week. We only get manufacturing data on Friday after the fact. It's just one of those weeks that we're going to get that. So, Cayman, you make some
Mm.
really great points about the dollar, and I'll say, and I have to go back to this again. The market is aggressively short and bearish the dollar, and you haven't. I can't tell you. Okay. I do a lot of listening to podcasts and YouTube videos from analysts. That's how I pass my time when I'm like I'm doing my own analysis, like typing. Every day I type, if for those of you that don't know, I do all the updates for like the basic technical analysis at the end of the day for all of the instruments here. That's just part of my job duty here at Forex Analytics is I do analysis on Bitcoin and everything else, and S&Ps, and I'm writing all that stuff at night, and I listen to a lot of analysts. I can't tell you anybody who's been bullish the dollar at all over the last 6 months. I mean, and the roars have only gotten louder up until like a week ago. So, everybody's bearish the dollar. Everybody thinks that the euro is going to 125. How many bank analysis have you read in the last uh couple months? It'd be the polar opposite from the end of the year that all the analysts were thinking that the euro is going down to 90 that are now forecasting 120 to 125. I mean, have you seen anybody that hasn't given you that forecast, K-Man?
Well, there's one, but yeah,
Okay,
all
so
the
you
rest are
found one
looking.
out of the 20
Yeah,
that you've
exactly.
read.
Yeah, most of them are looking for a much lower dollar still. I am not going to exclude it because if the at the point, if when jobs market turns around, then we could actually see it. But the thing is it really going to turn around? Because we have been expecting this job market to weaken. It has softened. Let's say it has stopped running at completely full employment, but it's not been dropping off a cliff yet. And I th to really have the next leg lower in the dollar, I think that's going to be the key point of everything. But for as long as it doesn't happen, you're looking at data which are still stronger in the US than they are in Europe, for instance, which are to Japan you can hardly compare it because Japan is such a different economy. Everybody is trying to compare stuff, but Japan is a completely different economy. We need to take Japan completely out of it.
Yeah,
But
we're not going to have like we're not going to have a Japan 1985 or
no,
82 situation
no,
where you got this move. You're just not going to see that in the US.
no. No,
Okay.
no, oh no, 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 you won't unless
People like to draw
unless
that
really.
parallel, right? They
Sorry?
do. People like to draw those parallels.
Yeah, but I mean, we are in a completely different era as well. I mean, compared to 1980s, or even the 1990s, even pre GFC, how much more money is there in the system today than there
Yeah.
was then? And you don't have to go back 40 years, go back 17,
20.
18 years.
Yeah, right, exactly.
There's so
Greenspan
much
era.
more money in there. I mean, I don't think we are going to see these kind of moves anymore. At least not for the foreseeable future. Mm.
Oh man, it's a famous last words of K-Man. Just
I
kidding,
know,
I'm
I
done.
know.
Hey, okay.
My ultra long term view. I think dollar yen is on its way to 200.
Yeah, I've been playing this thing to the upside, and this is okay. Let's talk dollar yen really quick, and then we do need to talk a little bit about precious metals and what we see in the S&P.
Mm.
So make sure you guys are all sticking around for that. Actually, before I do this, let me mention a couple of things since I got everybody's attention here. Right in the middle of our website, Forex Analytics with the X, .com. Just click right here, and so you can get on our mailing list. It comes out once a week. You get our newsletter on Sundays. Put in your name, email address, because two reasons. One, you'll be registered to win one of two trader funding program for the month of July. We have 2 more days, well, 3 more days, including today. for you to get registered to be eligible for this month's giveaway. We're giving away two free trader funding program assessments. Also, you'll get notified on, well, there's three reasons. You'll get notified on developments as we are adding features to trading analytics, and you'll be able to be the first to know. Also, you're going to be getting your link to the risk management webinar we are doing on August 7th. So on August 7th, which is on I believe it's on a Thursday. It is on a Thursday. We're going to be doing a big risk management webinar with K-Man's going to be there, Dale, Ryan, myself, Steve Stelios, Andre, Nick from Trading Analytics. We're going to be doing a big risk management webinar. And even if you're not there, you'll get the recording. But your login details, how to log in, will be in the newsletter. So you need to be registered for the newsletter to receive your login details. So make sure you do that when you get a chance. Also take advantage of our sale, our summer sale, which basically grandfathers you into prices that we had in 2019. So make sure you do that. All right, man, I do want to talk a little bit
Yeah.
about the yen because uh, and I wanted to mention this because the market in CFTC positioning. Let me see. I'll see if I can pull it up while you're talking about it. CFTC positioning. I know CFP.
Try
Fuck.
again.
Yeah, it is still 5:30 in the morning here, and I've been going for a few hours now. Um, it had been aggressively long yen, expecting a break of 140. Speculative funds have been at the historically largest position size they had when we were down there. We've made a nice pivot off of that, and you got everybody still short the dollar. Um, I think that the dollar yen could very easily trade up towards the high 150s up here.
Mm.
So why do you think that the dollar yen's going to 200 eventually?
No, that's a really long term, and it has to do with Japan can't really manufacture anymore. Well, I mean, can't factor more than they do right now in Japan because of their demographic situation, and you still have a very strict migration policy as well. It's still not that obvious to go live indefinitely in Japan as well. And then I'm speaking about people who really would mean something for the Japanese economy. But no, it's that's a really long term thing. In the more shorter term, we have seen this happen before. Last year we had this very big drop in the dollar yen, and every time afterwards it starts to recover. And now we are in a that's for the short term, then in a quite perilous situation politically over there in Japan as well, because LDP leaders would want Ishiba out, but the voters apparently wanting to stay on. That means more fiscal spending, whatever happens, and we know that fiscal spending is never a good thing for the currency. So I agree. Also, the deal with the US, if it goes to paper and being signed as is going to cost Japan a lot of money as well. And so it's going to depend about the US data, obviously, because the US is the biggest bloc, etc., etc., etc. But providing those data don't completely fall out of bed, I also think the yen is not going to strengthen lastingly. The Bank of Japan still has problems to raise their rates the way they would want to. I think they're behind on their schedule, but they are trapped. So I don't think this week they will hike rates unless a huge surprise. And yeah, I think that yen is still on its way to gradually weaken. Now, again, as usual, choose your currency wisely. I don't think that long euro yen is the best kind of cross that you can have now, seeing the euro, right? But
Yeah.
just maybe just plain dollars, mate. And yeah, I still think that the yen has more room to weaken. When you look positioning. The problem with that positioning is that we don't always know what's going on in the rest of the market, right?
Sure, there's a lot of hedging going on, and there's
Yeah.
different ways to calculate sentiment, but still, I mean, you look at that positioning, and that was the most aggressively
Mm.
long non-commercial speculator position ever in the yen,
It's
ever.
it
The-
yeah, and that's those people are banking on those big changes, US, Japan. And we were talking about it. US Japan trade deal should have been a no-brainer. And look at all the issues that emanated from it. This is another
yeah,
reason why I think that yen is not really a currency you should be really long or for long. Everybody can trade retracements, of course, but I mean, look just at that. It was a big issue, right?
right. Hey, K-Man, I'm gonna grab Tracy. We have Shy Girl here. She should be here.
Oh,
I'm
great.
just trying to find her. I'll bring her in so you can meet her. I don't see her just yet. She said she should be here any moment. But just so you guys know, I'm gonna be joining her on Ninja Trader Live for the FOMC. So I'm gonna actually
Hmm.
be with her tomorrow on her show on Ninja Trader Live. Just letting you guys know, normally we don't broadcast the FOMC, and I'll be back in the chat room for all the Q and or the presser because that's where all the moves are going to happen, guys. I'll be there. I'll be on her show for instant reaction, but it shouldn't be much of anything. It should be kind of tame. But K man, what are your opinions for the
Yeah,
FOMC going
I
on?
think all the three main ones. I think we have smaller ones as well as CRB and stuff, but I think the three main ones are going to be on hold: FOMC, Bank of Canada, and Bank of Japan. But to various degrees of perhaps uncertainty. We know about the pressures that there have been on Powell, but he held strong. We know about some. We could have some dissenters think about Waller and Bowman, who may politically vote for a cut perhaps tomorrow. But I think mostly it's going to be a should be a non-event. Of course, the market will perhaps react a little bit on those dissenters, but everybody knows that they are now at risk of dissenting, right? So
Yeah.
I don't think there should be any real surprise on tomorrow's FOMC unless we get more precise guidance. But they've all been holding back from giving too much guidance. So yeah, I don't think we'll have too much tomorrow. Also, I reckon Bank of Canada stays on hold, and then we'll have the ping pong between McClem and his and Rogers. They will be dancing together. I think they will complement each other. One maybe a little more dovish, the other one a little more hawkish. And the Bank of Japan, they are trapped for now, and I don't see them move. And same lines coming up. Yeah, we will move whatever we can, but over the last couple of inflation data, it was all like, oh yes, the inflation data are above our 2%, but the underlying inflation is not stable. So I mean, they're trapped over there as well.
And
So
speaking of the dollar CAD, this has been something that I've been, looking for over the last couple of months
mm,
is this big double bottom here. I mean, if we break 138, I mean, this does point to
yeah,
140, just so everybody can I think it's actually higher than that now that I'm thinking about it. Yeah, it's like 141, 142. Yeah, it's 141. It's above 140. And I mean that's something to
yeah.
when you think about and I'm sorry, Tracy, if you're here, please raise your hand. I don't see her here, but if, Tracy, if you're around, don't know where she's at the moment. Let me see if she sent me any messages while we're discussing this. But if you start thinking about uh you start thinking about Europe, Canada. I mean, what does Canada look like post reshaping of the USMCA? And look, this is all to my Canadian friends that are here. We got a lot of Canadian clients that are in our chat rooms. By the way, if you guys are not in our chat rooms, this is what our chat rooms look like. All well, hey, Sometimes you get one of those pops up. Thanks, Amir. This is all of us like chatting and talking about the markets all day long. Um, what does Canada look like post trade tariff war with
I don't
Canada?
know. I really don't know at this point. But yes, I've been saying as well, and on my updates in the room as well, I think 138 is quite a big level on the dollar Canada. Unless, well, until it goes, it's still going to be quite a big resistance right here in the more medium term. But if it goes, it could really fly. I'm just trying to hold back because I don't know exactly what's going to happen with the US data, maybe tomorrow, Bank of Canada, but looking at the dollar, it's looking pretty bit overall, and we can't discard that even for the dollar Canada, you know. By the way, Blake, I don't see Tracy in the participant.
No, she says she's coming on. She'll be on like literally right now. She is
Oh, okay.
running 5 minutes late, so she'll be here in just a few minutes. So you guys don't worry about it. She'll be right here. And let me just let her know that is cool. She's on air too, so she does. She's a personality on her show, so all is good. I'm just letting her know that all is good here. All right. So, well, K-Man, since we still have you here, and thank you, by the way. I know K-Man, tell us a little bit, tell everybody here about what you do on the Flow Show with Ryan, because today I missed it because
Mm.
I had to be on another meeting this morning. But tell everybody what the Flow Show is and what you guys do there.
So what we do is we run through the major headlines where we think that may have an impact on markets. We are not like a full news show. That is absolutely not the aim of the show. But then we look also more at a bit the fundamentals of what is moving what. Not specifically on technicals driven, or the fundamentals drive our technicals, I will say. Um, we do include at the end of the show, we look at charts and stuff, but it's not the bulk of our show. Our show is rather talking about what we think is driving markets and where are the risks for some markets, some currencies, etc., etc. So it's more like, how shall I say? Yeah, it is more a bit fundamentally driven, looking for reasons rather than um, looking for the pictures to tell us what we do. So we're trying to give to our audience over the course of the day. It's a bit useless to do two shows who are going to be completely the same, right? So
Yeah.
we have like the flow show talking about different stuff and in a different from a different daylight, as where face like we do now, our main show for our American guests as well. And we talk about a lot of technicals and etc.
And by the way, Tracy's here. I'm bringing her in right now. One of the things that I learned, K-Man, just trading with, the guys out of Greenwich for so many years is I want to know the whys. Like, because when you're trading, especially those of you that are just like mostly technicians, which look, reading a chart is just kind of like me reading a map, just being able to say, okay, this is where I'm at. This is where, this road is going to lead us to here more than likely, as long as I don't, hit by a freight train or whatever. But it's just a map. And the whys really matter to me. And they didn't matter as much as they they do now after trading with professional traders that I did was for so many years because they always ask the questions, why? Okay, so if the dollar is rallying, why is it rallying and can it continue? And those are important questions that need to be answered when you're saying, okay, I'm going to buy the dollar Canadian when it breaks above 138 because the double bottom points to 140, but why? And to not know the reasons why is extremely lazy in trading. And I know everybody wants the easy way out, but see, this is the why you should be listening to K-Man and Ryan in the mornings on the Flow Show because they tell you why the market can do what it's doing and if it can continue. So, what do you have to say about that before we bring in Tracy?
Well, that's exactly what we are trying to do, and we do the work for you. So we prepare this flow show every morning, and we spend quite a bit of time on it actually, just to make sure that we don't see any that we don't say anything stupid or we didn't miss anything really important. So yeah, join us every morning if you can. It's 10:30 London time. We are there every day, apart from the exceptions where we both are off, or Christmas or New Year holidays also, or when I'm going to chase the Easter bunnies, for instance.
Well, with that little grandson of yours, that's not too far away. Hey,
Yeah,
K-Man, while you're here, Tracy, good morning. I just want to bring Tracy on in. How are you doing?
Hey, good morning, everybody.
morning,
Good morning,
Tracy.
Trace. So, for you guys that don't know, Tracy from Ninja Trader Live, she's here with us today. I'm going to be, like I said earlier, I'm going to be joining her on for NFP tomorrow. So make sure you catch us on Ninja Trader Live. I'll be doing
FOMC.
F. Oh, did I say what did I say? NFP?
NFP.
Ah, shit. It's still 5 in the
It's
morning here.
going to be a very long show if you do both.
Yeah, yeah, no, the FOMC. Sorry, guys, I meant to say
Yeah.
FOMC. If I said NFP earlier, I meant FOMC. So yeah, FOMC tomorrow. I'll be live with Tracy on Ninja Trader Live. And Tracy, for those of you that don't know, she doesn't spend as much time as she should sometimes, or as she has. But she's in our chat room, so you can pop in there every once in a while and say hi to Tracy. She pops in from time to time. And but I've got K-Man here really quick. And I don't know if you guys have formally met. K-Man,
No, we
Tracy?
haven't. Very
I
nice
have
to meet
not.
you.
Nice to meet you.
Likewise. Very happy
K-Man's
to have you
K-Man's
here.
K-Man's been he's been trader for over 40 years, a bank trader in Japan, bank trader in London. Tell her a little bit about tell us about yourself there, Kay.
Oh, me?
Yeah.
Yeah, I've actually been an FX, a spot FX market maker for about, what is it, 35 years or so. And yeah, so I've been working in the major banks, yeah, I've been working for Citi, Barclays, BNP Paribas, and one other, I think. Forgot actually. Oh yeah, the one that became ING afterwards. Yeah, so I've been market making for the biggest clients, central banks, hedge funds, asset managers, over the course of my career. And the bulk, well, the second half of it, let's say, was mainly market maker in the yen. So I spent a good few years in Japan as well.
So Tracy,
Amazing.
when the dollar yen breaks out to 200, you know the guy to call.
Absolutely. We'll have you on the show.
Thank you.
There, there you go. So,
Hey
so
guys.
thank K-Man.
Yeah.
I want to thank you for being my my partner in crime today on the Face Show since Dale was out and seems like everybody else is out on holiday right now. So thank you so much for being here and with me today.
Anytime, amigo. Have a great show, the both of you.
All right, thank you, sir. So Tracy, what's happening there, lady friend?
Hey there.
What's going
So,
on? How's everything going with you?
going good. So, show is going good. Markets continue to grind higher.
Yeah. So
Uh,
what are you hearing there? You know, from I know you bring in a lot of guests. You got guests all day long in on your Ninja Trader Live as well. What's everybody saying about this grind higher in the markets? I mean, it is obviously the most hated market in the world
Ever right now, yes.
ever. And I've heard that before, but when the S&P was at 3,000. So here we are double and people are hating it because I always hear this, and this is funny actually. People go, "Oh, Blake, the market's broken," and the my initial response is, "No, you're just trading like shit and it's working against you. So you think it's broken, but no, you're just not trading it well. So whenever people say it's broken or it's the most hated market, that's because they keep fading it and it's just not working. But how do you feel about the markets where they're currently at?
Well, I think, Jim Carzon was on the show last week and he explained it very well. He said, he calls it the summer of George, where uh, you just have extreme vol compression
Oh,
and
I was going
that
to say
just
Costanza. I'm just kidding.
yes, yes, actually, yes. It's after some Seinfeld episode where I guess he didn't do anything all summer and then he couldn't get up after the summer. I don't know, he atrophied
Yeah.
or something. I don't know. I'm not a Seinfeld person, but anyway, don't. But it is after that, it's after a show. So we have this extreme vowel compression, meaning the VIX is extremely compressed. Right. And that's just how everybody is positioned, market makers are positioned. And so because we have this extreme vowel compression, that disperses in the market, so the market just keeps moving higher. And so until sort of that pressure off the VIX happens, we'll probably continue to see markets grind higher. That said, we have, it is still summer. It is kind of, never short a boring market, they say.
Yes.
Um, and I think, once we kind of see more, once we get to fall, in other words, in September, and it usually starts like mid-August, really, actually, where you have people come back, you have people repositioning things, you have a whole bunch of institutional flows come into the market after being kind of away all summer. And so, we will see what happens kind of mid-August. And I don't really expect that much to happen until mid-August or September, in other words, and where we might get some more volatility.
So, okay, it's interesting you point that out. So we had the VIX and by the way, I mean, I'll be the first one to say I thought this compression that we had was like, okay, we got a new level, and this is kind of what I was talking about here. We have a new level of volatility above the previous base. I'm like, we got to keep that in mind. I mean, that eventually is gonna lead to higher volatility, and because we're stair stepping, if you will, not making lower lows. But once we broke through that bottom, that support, you'll notice that was the what took the S&P above resistance, and broke us out, a week and a half ago. So this low volatility environment, and you're exactly right. Never short a dull market. I mean, that's one thing that if anybody with any decades of experience will tell you, when it's especially for equities, you don't do that. And if you don't understand the concept why, it's because we are in a passive flow market and have been really for a full generation now. Tracy, when I started in the industry, it was in the mid 90s. I got my Series 7 in 95. I'm sure you weren't too far away from there, as far as like time wise goes, starting in this business. We were not in a passive flow environment. It's really been the last couple of decades where, you know, you get a job with Intel or GE or whoever the hell you want to get a job with. You get a job and automatically 10-15% of your income goes right into your 401k or your IRA. And
Right.
that type of environment
And
breeds low
yeah,
volatility rises.
well, yeah, because all they do is invest in, major
ETFs.
stock ETF. So
Yeah.
that's all you're seeing is those flows are consistent every month, and they just pour into kind of the same ETFs.
Yes. And now is especially with the rise of ETFs and index funds that are really like, you invest in any retirement account. I mean, I do, it's like, okay, you want aggressive moderate, conservative. They don't even really give you, now some of them will say, yeah, you can select some funds, but most of them are like, you just tell us
Right.
what you want. We will allocate you into, into
Right.
indexes.
Exactly.
And that's what grinds you higher. And so anyway, that is one of the reasons why this low volatility environment is producing moves that we're seeing. But where are you at as far as where do you see the markets going from here?
I mean, I think I have to agree. I think that we're probably going to just grind higher for a few more weeks. If we are going to see volatility, it will likely be in, last half of August into September, because that is generally when we do see some volatility come back into the market. It's just a kind of a seasonal thing. So that's what I would be looking at. Obviously, anything could happen geopolitically, trade deals can fall apart. Who knows what can happen? But uh, really, when we're kind of in this environment, we don't really see that much volatility until fall again, once again. And we had Jim Bianco on this morning, and really he said that most of this is being driven by the retail trader, believe it or not, because institutions aren't really involved unless the ETFs, et cetera. And it's really the FOMO traders that are just chasing this higher. And so he thinks that this is being guided by the retail traders.
Interesting. Now I want to ask you a couple questions here regarding, well, I'm gonna ask you about crude oil. Because crude oil, it slumped to $64, and I'll just show you technically it looked like a bear flag pattern. Still is
Right.
technically still a bear flag pattern, but we sold off following the Israeli Iranian peace talks or
Not
ceasefire.
surprising.
Yeah, we slid, we stopped at $64. We have not been able to get above a sustained break above the 200 DMA. But what's interesting is with equities where they're at, and we're seeing, the trade deals, whether they're good or bad for the US, whether they're good or bad for any other country, doesn't really matter, but we're seeing the risk subside. One would think that crude oil, since we're, still,
Would move
we haven't
higher.
seen signs of weakness of the U.S. economy. You think we'd be higher now, but
Well, yeah, I think its overall sentiment in this market has been poor for a very long time.
okay.
Um, and I think, and you can see that in positioning and you can see that in open interest. There's just, it's fallen off a cliff. Nobody really wants to be in this market. And I think that it's kind of caught in this push-pull where everybody knows President Trump wants these lower oil prices. That said, you hold below 65 for any length of time, and then you start seeing production come off in the United States. And Chris Wright, who is our energy secretary, obviously knows that. He's an oil guy, right? And so he's kind of had to tell President Trump, really, $40 oil prices is just not going to work for the US, right? That's just not reasonable. Production will come off and he wants drill baby drill. And so I think we're kind of caught, every time we kind of dip below, um, you know, 60 to $60, it gets bought right back up
Yeah.
again. And, I would like to, and, I don't, what I don't like about this chart is those two spikes that we had geopolitically wise. Like if you took out those spikes, because it was just a geopolitical move and literally sold off the same day. So if you took that out, we're still kind of in a tight range. And so at 67, $68, that works for everybody, right? It's not too high. Oil production, you're not going to see CapEx come off. And below that, you are. So there are some fundamental things behind this market that are kind of keeping it afloat. And Chris Wright has been very vocal. Basically, I call it Chris Wright put, saying, below 65, is going to not be good for US producers.
You previously in our discussions a couple of months ago, I think I was on the Face show with you, or maybe it was on your show. I can't remember. But we were talking about really the $55 level being like the line in the sand for the market. What I found was interesting about this technical development, Tracy, is in the event that the bear flag does break for whatever reason, like let's say we break 64 bucks. If
Right.
we did, it would take us right back to 55, and that would be like ideal to be long down there. I mean, obviously, that's
Yeah.
I just always go back to that comment that you made. Like I said, it was a few months ago. I don't know if it was when we were in Vegas together
I
for
think it
the
was,
money
yeah, I
show.
mean,
I don't
55
know.
is, we've had producers say, 50, 55. The big guys say 55 because they have a lot more, it's kind of higher for sort of those middle producers. Exxon and Chevron,
Yeah.
could handle 55, but they don't want it. Whereas some of the smaller E&Ps would not be able to handle that.
Okay. All right. Well, let's talk about something else you're probably pretty familiar with is gold. And gold, I mean, is
Oh,
finally we finally broke this ascending trend line as of yesterday.
right,
It was a false breakout. Actually, we had this if you go back to last week, we had an inverted hammer or a gravestone doji that was developed on it was the daily chart, or it was actually on a weekly chart. It was our weekly uh, here, I'll do it this way. You can see this weekly gravestone doji, right? False breakout above the resistance gave us a reversal. We're starting to see that reversal now, and obviously with the EU-US trade deal, people are looking at Europe going, okay, that's not great for Europe. Gold's now starting to break lower. Where do you see gold going? I mean, positioning is so. I mean, how many people have you had on your shows over the last? You guys have been broadcasting now, what, 4 months, 3 months?
yeah,
How many gold bears have you met?
none.
Okay, there you go. All right. So you don't meet any gold bears. It started to show its hand over the last couple of weeks. We've been discussing it here that it's like gold's not doing what it should be doing, especially with the dollar as weak as it was. So gold's really starting to show a reversal. Do you see gold dipping much?
I think we're still going to have shallow pullbacks in this market. Only because what is different now is that you have all the central bank buying, whereas before it was mostly a paper market. You didn't have that huge demand from central banks that we started having in 2022, right? And that's only increased. And there was just a survey out on that for H2, 60% of central banks said they were still planning on buying more gold regardless of price. And so you're always going to have, or not always, but at least for a while, there is that underlying bid for the physical from central banks, which is something that we really haven't had a lot of in the past.
Okay, all right. It's interesting, and I agree with you. Like, no, I mean, fiat just in general. You can talk about the dollar, you can talk about Eurozone, whatever. I mean, deficit spending is increasing. Fiat
Right.
is becoming more unattractive. I mean, I like trading currencies because you're trading currency against another. So it's like, oh, the U.S. is going to perform better than the UK or the better than Great Britain or whatever the case may be. So I like trading fiat in that respect in a pairs type of environment. But overall, gold and some of these precious metals look great. I mean, I'm gonna leave it here just because our show is pretty much over. But I want to ask you because you always have something in up your sleeve from a trade point of view. What's hot on your radar right now?
So I am, well, I'm always looking at commodities, but
Yes,
I like junior
Microsoft.
miners.
I'm just kidding.
No.
Yeah,
No.
okay. I thought you were going to throw me a curveball there. All right. So you like
No. I
miners,
like junior miners,
which
honestly,
is
right now.
what is a G
You like either gold or silver or actually a platinum.
but
Um
what is the symbol?
it's G what is
Gold
it?
miners. Hold
GD.
on. It's
The
GDX.
junior, it's GD. I don't trade that. I trade.
GDXJ. Okay, here we
Yeah.
go. Got it.
So that gold miners have kind of had a bigger move. So, I wait for pullbacks on that, but you're just starting to see a rally in some of these other, like, I don't really like the ETFs. I individually stock pick because this chart to me looks oversold or overbought. But if you look at individual companies, they don't look that way. So I don't really prefer ETFs. I am
Do you have
I
anyone
am an
in
individual
particular?
stock picker. So I have Sylvane Stillwater, which
What's
is
the ticker?
platinum. SB, why don't I not know the ticker? SB, uh, hold on, let me look at my look at my account really fast.
Yeah, yep, sure thing. Hey, talk your book. It's all
Um,
good.
SBSW.
SBSW?
SB, yeah, SW.
Oh, wait,
So I'm
SB
for SW, it's a platinum play.
Stillwater Limited. Sabane. This one, oh wow.
Yeah, so I mean, it's still only at $9. I got in around four, but it's can move. I mean, it can go a lot higher.
Yeah, I mean
I still like it.
it's still got a lot of room. I mean, we're at the 38% retracement, but hell, if you start breaking above 10, I mean that's when things get pretty lively, I would assume.
So
So,
there's my play for the, I would wait, I'd love it for it to pull back a little bit, work off some of that overboughtness, and if you could buy back at, I don't know, is that your 200 day or what's
yeah,
whatever
that's a
your red?
200 DMA, which would be about $8.
Yeah. So if you could get
Nice.
that, I think that would be a good play for, as far as risk reward, because you could have your stop just below that.
Very, very nice. Well, Tracy, I want to thank you for being here today. It's always a pleasure speaking with you, and I'm going to look forward to speaking with you tomorrow at the FOMC decision on your show. So, Tracy, what's the best way for traders to find your show?
So we are on a Ninja Trader YouTube channel. We're on every day from 8. I do the pre-market show, the pre-market kind of macro show. I'm on again at 2:30 to talk commodities.
All right, so I'm actually gonna go right here. This is well, no, I don't want that. I want to actually just go to your thingamajigger. Hold on. There we go.
There you go.
Okay, so you're this is the YouTube channel. And look, there's Tracy right there. So make sure you guys subscribe to the Ninja Trader Live. Watch some of her shows after you're done watching our show.
So,
Not
and yes, and
watching.
again, we'll be on at 2 for FOMC tomorrow, so we'll be on a bit earlier.
Yes.
And Blake will be there, so everybody tune in to see Blake.
Yeah, and tune in to see Tracy as well. So, Tracy, it's always a pleasure. Like I said, I got an opportunity to meet I got to meet Tracy live, and her and my wife and I, we got to hang out and go to
That's
some
fun,
dinners and have some fun. We got to gamble and stuff. It was great meeting her in person after knowing her for a decade online. So
right?
she's a real person, does real stuff, does real trades, and she's a great human being. So Tracy, thank you so much for joining us today.
All right. Thank you guys. Have a great rest of your day.
You too. I'll see you tomorrow.
Cool.
All right, and traders, don't forget, make sure you take advantage of the summer offer. We're only going to keep that up for a little bit longer, but lock in your low prices because once they're locked in, they're locked in. As long as you're an active subscriber, so take advantage of our summer discount. All right, have a great day. Good luck. I'll catch you guys tomorrow on the Face Show. Dale will be back tomorrow. All right, guys, have a great one. Bye bye.